Good afternoon and welcome to this special broadcast on CNBC Africa. I'm Tanya Habimana and today we have a thought-provoking discussion lined up focusing on a region that's rapidly positioning itself as a critical gateway to Africa's economic expansion. We're talking about the Mauritius International Financial Centre, an entity that's at the forefront of channeling global investments into sub-Saharan Africa. In today's panel discussion, we'll dive deep into Africa's macroeconomic environment, exploring emerging trends and highlighting substantial opportunities for investors. We'll also examine the strategic advantages of Mauritius as a platform for investment alongside legal frameworks, real estate insights, and the incentives that make it a prime hub for cross-border financial activities. Joining me are esteemed experts from across several industries and sectors who will share their insights and strategies on leveraging Mauritius as a key player in Africa's growth story. So stay with us as we explore how the Mauritius IFC is leading global investments to accelerate Africa's economic expansion. Joining me here in studio today, we have Parik Tulsidas, Head of Financial Markets at MCB, Priscilla Balgobin-Boyroil, Senior Partner and Barrister at Law for Denton's Mauritius LLP, Bilal Adam, Chief Executive Officer for Stewards Investment Capital, Gareth Land, Property Consultant at Two Futures, and Natalie Dinnis, Chief Executive Officer at Mitco. Now, in starting off this conversation, I want to address my first question to you, Parik. You obviously look at the financial markets, you look at economic trends. How do you view the current macroeconomic environment when it comes to Africa? And also, what do you identify as the key opportunities for investors when it comes to financial markets?
Firstly, hi, Tanya. This third decade of the 21st century has been a very challenging one in Africa. I would say across the continent, really. Firstly, we've had COVID, and then after that, we had the Ukraine war, and then we had the trade tensions between China and the US. We had high inflation that creeped in across the developed world, and it had an immediate effect in the emerging markets, especially Africa. With that came high interest rates in the US and in the developed markets, and that has increased the cost of funding for African states across the board. All of that has meant that it's translated into high interest rates in African currencies, high cost of borrowing, high cost of living as well. And at the same time, what's happened is that there's been a big outflow of investments that were coming into Africa have gone back into the Western world because the interest rates are much higher. So all of this hasn't helped in terms of the foreign currency as well, of the currencies, the local African currencies as well, has put a lot of pressure in terms of accessing foreign currency in the local African currencies or in the local African markets. And that has put a lot of pressure in general, whether it's socio-economic pressure or in general, it's made things a bit more difficult in terms of these African markets. Now, the silver lining, if you want, is that we are finally now coming to probably an end of the high inflation environment that we had in the developed markets. So that means that, as you've seen since the last couple of weeks, everyone is talking about potentially, interest rate cuts, and that would reduce the cost of borrowing. Now, when that happens, normally you see an influx again into emerging markets, right? So investors start borrowing in cheaper currencies, and then they come and invest into markets where the returns are much higher. So potentially, I think in the medium term, if we see a confirmation of lower interest rates in the developed markets, we should see that translate into more investment, whether it's in equity markets, it's in bond markets, or other types of financial instruments on the continent. But if you forget about the financial market side, you look at the fundamentals of the African continent, the economic fundamentals. You have abundance of energy resources, huge amount of metals and minerals, right? You've got a very young population, okay? A population that is aspiring to consume more and has better education than it had previously. So the demands are much higher and the expectations are much higher as well. However, what we see is that with all the money that comes through the commodities, trading, as well as the metals and minerals trading. Unfortunately, we haven't really seen that pass through to the different economies. And I think it's extremely important that we see a better pass through, because that will mean more consumption. That will also mean a lot more opportunities for foreign investors to come into, whether it's the tourism sector, whether it's the retail sector, fintech, and the opportunities are enormous, and anyone would want a piece of the action. So when they tell you that Africa is the land of opportunities, the opportunities are there. But I think there needs to be a commitment as well, from a regulatory perspective, from the authorities, from the governments, to really make sure that whatever money is coming in is passed through to the economy, so that we start seeing a lot more opportunities for investments, whether it's intra-Africa or externally from the developed markets into Africa, in the retail space, as I mentioned, medical space, there are big opportunities there. Then number of private investors that are looking at opportunities, for example, in the mining space as well, okay, with cobalt, lithium, and a few other minerals that are, or metals and minerals that are important, for example, for the EVs, right? That's a big thing at the moment. So there's a lot of appetite, but we need to create the right ecosystem and environment to attract that sort of investment into the region.
That brings me to my next question to you, Bilal. I mean, looking at some of these fundamentals that Parik has just shared with us, how do you view the current investment landscape with the continent, and particularly how are you gauging investor appetite in terms of risk and rewards for the continent specifically?
Tanya, brilliant question. Fantastic to be here. Thank you very much. Supporting what Parik was saying, Africa cannot be seen as one singular continent. We actually are a variety of countries, each with our own cultures, our own languages, our own resources, our own strengths and weaknesses. So we see Africa as having a fantastic future ahead of a prosperous Africa where no one is left behind. And in order to achieve that, what we need is strong infrastructure. Once we have a strong infrastructure, the roads, the rail, the energy, the ability to transform our commodities, beneficiate our commodities on the continent, even creating the brands that the new brands or OEM production in the continent, we then capture more of that value. And as Parik says, we had the high interest rate environment, which led to an emerging market risk off. And as interest rates do come off, an emerging market risk on will create more equity investment onto the continent. And we here in Mauritius, we see ourselves as the bridge for capital that flows off the continent as well. In terms of diversification, we have many pensions and institutional investors who worry about their local currency devaluation. They worry about their fiduciary duty to the underlying investors, their pensioners, the people that sit behind them that they need to deliver a return to. And often they are compelled to invest into developed markets to attract those returns that my articulate colleague Parik has mentioned. So there's a two-way street, and what we see in Mauritius is that we are the bridge. On the one hand, we facilitate the ability for African capital to also benefit from developed market returns. But what we do, I spend 2 months a year in the US, in Miami and in New York, and I tell the Africa story. And we had a conference, a private credit conference, where we were telling people all about the burgeoning African opportunity, and we are very passionate about investing in telecom. And I believe that every time you go to a traffic light and you see a guy selling something on the street, that is an entrepreneur that could be empowered to sell something globally. And if we can plug in our African brothers and sisters, the street vendors, into a global market by giving them access to data, access to information inclusion, financial inclusion, we then, to answer your questions, to manage the risk, it's a double-edged sword. The opportunity is that the world is changing at an alarmingly fast rate. And if we don't keep up, we're going to get left behind as a continent. And the best way to stay connected is to actually be connected with the right amount of data and I'm talking about mobile, fiber, whatever it may be. Now, if we can achieve that, we can hopefully turn every cell phone that people can hold into a shop, into a school, into an entertainment. I mean, even if people are just watching CNBC on TV at home, that's great information and entertainment for them.
Yeah.
So we see that as an amazing opportunity. The risk is if we do not do it, right, and the rest of the world gets too far ahead, it becomes harder and harder for us to catch up. And if we do not give hope to our population across the continent, we are only as strong as our weakest link. And our prosperity must be widespread enough so that everyone has a hope and a vision in a prosperous Africa. And
that really speaks to the demographic opportunity that Parik was talking about just earlier on. I'm quite curious from your perspective, Natalie, in the line of work that you do, looking at wealth management from a more global scale, where do you see the future of the African continent within this?
Thank you, Tanya. So basically, with all this digital world, all this speed, I think that most of the people have access to a lot of informations. But how to streamline those informations, it's very difficult for them. Basically, we have a lot of clients asking us to help them, to give support, because the business is growing, they want to scale up, and they don't know how to structure. They will also have a doubt of which jurisdiction to choose. Is it Mauritius? Is it Dubai? Is it Delaware? They don't know. So we are here to give them a support, to explain why Mauritius and how Mauritius can help them in terms of developing their business in a safe place, I will say. I will let Priscilla elaborate on the legal side.
Yeah, and I'm coming to you on the legal side. So, I mean, we've talked about a lot of different opportunities. Mauritius as a strategic platform or strategic hub for investment as a gateway into the rest of Africa. How does this work legally?
Yes, Tanya, so it's been 30 years, but Mauritius has been an IFC. So 30 years is a long time. And it is not a sheer coincidence. 450 private equity funds structured through Mauritius, 82 billion of flows on the African continent. There is one word that investors hate, and it's the word risk. And our stable, legal, and quite sophisticated regulatory framework contributes a lot and has contributed a lot to investors who have come to Mauritius. In Aegis, Mauritius, we have a hybrid system, French civil law and the English common law. So a lot of investors are very familiar with the English common law. We also have a very independent judiciary. Our ultimate court of appeal is the Privy Council. And whether you want it or not, for an investor coming from Europe, this means a lot. It gives them a source of comfort. So also we have recently, we've had a range of very new modern laws which are very investor focused. The data protection laws, for example, as you know, GDPR in Europe is a big thing. Data transmission, transfer of data, data security, they will not do business with a country that does not have the right data protection laws. So we have a right framework, we have a regulator, also compliance. We were in a grey list not so long ago. We came out in record time. And following this, the government has set up a very robust structure. We are now in the whitelist, OECD whitelist. So for anyone wanting to do business on the continent, being set up in a country where there is compliance, strong corporate governance is helpful, is very attractive.
And I can imagine that this has an impact in terms of all types of investors. The kind of confidence that it can give investors and the security to know that there is a strong legal framework that would accompany investments going forward. And I'd like to get practical insights from you, Gareth, actually, from a property and a real estate investment perspective. That's something that we hear a lot about when we're talking about Mauritius and how it has been positioned as a strategic hub for real estate investments. How do you see this? What are the main advantages that you would put forward?
Tanya, to follow on with what my colleague just said, when one is investing, you need to feel secure where you're sending your money. And let's be honest, the world can choose anywhere now. You can sit anywhere you want to and invest it anywhere you want to. So when we've got the strong legal frameworks, which Mauritius has now set up, it attracts a huge amount of security in the fact that people can now look into this domain and say, you know what, I feel comfortable. So whether you're looking to buy something or just invest in a business, it's a huge peace of mind when you're doing it. So from my point of view, the property side, people love Mauritius now. Now that we're off the grey list, makes a massive difference as well. The money sits in notaries' accounts, it's safe. People can go back home after they've bought something. Takes 3 or 4 years to have the project completed, and they know there's total confidence that everything will be done and looked after while they are not there. So from that point of view, it helps us in the property market. A lot of Africa has got the same. So, you know, Cape Town, for example, it's got a very, very busy property market there at the moment. It's been climbing for the last 3 or 4 years, not only from expats coming in, but also, you know, internally. A lot of people internally have moved from their own provinces to Cape Town. It's become highly popular. But that's because the framework there is good enough to capacitate it. When you're looking at other countries, they may have very good investment opportunities, but there might be a little bit more risk involved with going to go and put your money there at the moment. So Mauritius-wise, in a very, very positive light at the moment.
Bilal, from your the clients that you interact with, what role has legal certainty played, and what are some of the other things that Mauritius has offered that has been able to attract further investments?
That's paramount. So when we look at investment coming from developed markets onto the continent, they often enjoy that Mauritius has an investment grade credit rating, or is one of the highest rated countries on the continent, if I may say that we're part of the continent. What we also have are the investment IPPAs, Investment Promotion Protection Acts. And what those do are they give our investors comfort when deploying capital into the continent from Mauritius, that you know, they get additional regulatory and legal certainty. We've often seen that, well, from Mauritius we see ourselves as the bridge, right? So the money is going off the continent for developed market returns and coming back onto the continent for the emerging market returns. And the money that we see that leaves Mauritius from the continent is often short-term money. It's often you know, passive investment, listed bond and equity type returns. We do fixed income into the US, and it's return focused. The money that comes back into the continent often has a social impact focus as well, and often is longer dated because it's a private equity or infrastructure play which has more of a longer commitment. And what then happens is the money coming back onto the continent is often in bigger chunks, and it needs to come through a hub, where in that hub we then are able to compartmentalize that investment for the size of the opportunity. So if you're dealing with a big allocator that gives you $100 million, they can't give you a $10 million allocation for a particular project. And what then happens is we then can hub those investments according to the investment criteria and split it accordingly to the right geographies and sectors that require that investment.
Wow, Parik, I see you shaking your head as well. Is this something that you've noticed too?
I think it's extremely interesting, the types of investments that we're seeing on the continent right now. In terms of so on our side, for example, we are very active in terms of financing trade on the continent in different markets, and obviously the energy and commodities trade is very big on the continent, and we play quite a significant role in there. But what we're seeing is that it goes beyond the economic value, right? And also, obviously right now everyone's talking about ESG, but the focus seems to be a lot on the environment side. So how do we reduce carbon emissions? But when you think about Africa, is it really about the environment, or is there that social element that plays a big role as well? Because if you don't cater for that social element and you don't make people's lives better, I'll come back to that point about the pass-through. It won't happen, right? You won't have a thriving continent. And I think we need to pay a lot of attention to that. I know that the developed market is wanting to put a lot more emphasis on the environment side, reducing carbon emissions, looking at the energy and commodity space, But I think in Africa, I'll give you one example of something that we've done with one of our clients, which is a big operator in the northwestern part of Nigeria. We've actually partnered with them to provide radio schooling programs, right, which helps their local communities and make sure that we are putting more emphasis on literary requirements of the people, so that we get a population on the continent that is well educated and that can fend for themselves. So I think these things are very much important, and we're seeing a lot of more of these types of investments that are going through now onto the continent. So it's actually very exciting times, I would say. Obviously, another angle that we are seeing as well. So Mauritius was actually the first country on the continent to sign trade agreements with both China and India. And what we're seeing also with a type of route that has become extremely popular right now is the whole axis between India into Africa and China into Africa. And a lot of these companies now, a lot of these corporates are now using Mauritius as sort of an investment hub to sort of have a one-stop shop for whatever businesses they're doing in different regions of Africa. They're looking for funding, they're looking for transactional banking, they're doing their payrolls out of Mauritius as well. All their procurement and treasury management is being centralized out of Mauritius and into different parts of Africa where they're doing their investments. But I have to say also that, Mauritius IFC, when we talk about an international financial center, we are agnostic to whether companies are structured out of Mauritius or anywhere in the world. As long as you're doing business in Africa, I think we've today, like Priscilla mentioned earlier, we have 30 years of experience in the financial sector, right? Yeah. We've created an expertise for ourselves into that space, covering both, I would say, Africa and Asia. So we understand how to structure, whether it's finance, whether it's advisory work, investments, whether it's even things like hedging of currencies, managing your risk better. I think we understand that as an ecosystem. It's banks, it's law firms, it's asset managers, it's fiduciary services, it's the property side of things as well. We have that ecosystem today to actually make a difference on the continent. And as Gareth mentioned, I mean, who wouldn't want to live in Mauritius as well? You've got beaches all around, right?
Yeah, not a bad thing to have. Yeah. And I want to come to you, Bilal, but before that, I want to come back to you, Natalie. You gave a very practical example in terms of how the IFC can be used and how Mauritius is positioned as a strategic hub. How does MITCO use the IFC in practical terms to facilitate private, corporate banking services to support investments into the continent?
Thank you, Tanya. As I mentioned just before, I believe that you have more and more opportunities in the continent, and you have also more and more millionaires coming up, and those people need to structure their business. So it doesn't matter where you are in Africa. I think Mauritius is a great IFC, as Parik and Priscilla mentioned. We have all the 6 key elements, I will say, as an IFC. We have a good reputation. We have a good regulatory framework. We also have very accessible banking system. I will say sophisticated one, because we have more than 23 banks in Mauritius. We also have operational efficiency. And the most important, I think, for those investors is the cost efficiency. Compared to other jurisdictions, as I mentioned. And for the private equity, as Bilal mentioned, we have also a legal exit strategy. It's easy for people to exit their investment.
Absolutely. These are very good points that I'd like to get back to. But Bilal, you had an earlier comment to add to what Parik was saying.
Yeah, what Parik shared really resonated with what we see in the market. So firstly, around returns, returns have become necessary but insufficient. Financial returns are one thing, and the social impact must always be seen within an investment as well. So I think we as allocators on the continent, as investment managers, really need to take cognizance of the social impact in what we achieve. So I just wanted to say that commend Parik on that project. That's a fantastic project. and then looking at the financial capital flows, we see the Indian and Chinese financial flows coming onto the continent, but they're also good flow, like commodity or when I say good, physical good corridors where one can import or export oranges to Mauritius, beneficiate those oranges in Mauritius, and export them into China on a free trade corridor. So there are opportunities for capital flowing in and also goods flowing out, which is something very interesting to use the Mauritius platform for. And then just something Natalie said also struck a chord with me is, we're talking about the number of new millionaires emerging on the continent, and we also see a lot of fintech millionaires emerging who look at Mauritius as a safe place to do business with great connectivity, with the fantastic legislation that is innovative and promotes adoption of blockchain technology. So that has also been something attractive in Mauritius for the continent.
Absolutely. And I mean, with all types of investments and economic environments, there's obviously the opportunities, but also the challenges. Something that has been talked about already is the rate of returns, and I want to dig a little bit deeper into that. But I also want to look at some of the legal challenges that companies would have faced. You talked about grey listing earlier, Priscilla. What are some of the challenges that you've been exposed to that companies commonly face when investing in Africa, and how has the Mauritius legal framework been able to counteract that?
Sure. So Bilal talked about investment, promotion, protection agreements earlier, and that's key to investment. We have about 24 IPPAs, as we call them, with Africa. That means that a European company sets up in Mauritius, becomes a Mauritian company, and therefore benefits from any protection that Mauritius has with a host country with which it has signed the IPPA. And all agreements differ, but some of them cover, expropriation, nationalization, which are real fears by investors. But also the host country has a duty to treat investors in the same manner as it would treat a local investor. Mm-hmm. For someone who's investing millions of dollars on a continent in a country with which we are not familiar, this is of prime importance. Yeah. Also structured through Mauritius, a corporate governance framework is key and is very robust in Mauritius. So a board of directors sitting in Mauritius would probably have to uphold the same standard of governance as what that company would have in Europe, in the US, or anywhere else. So that gives comfort to the investor, to the shareholders, to all the stakeholders. And so risk is very much at the board of directors bears the risk factor very much in mind, as this is central to the corporate governance framework. So these are a few, but also corruption, the lack of independence of judiciary in many parts of Africa, rule of law. Unfortunately, we've seen a decline in rule of law in sub-Saharan Africa. All these are factors which you have to take into consideration.
Natalie, would you like to add to this point?
Well, I would just like to add a point, not in terms of legal, but in terms of volatility of currency. Mauritius can mitigate that risk as well, because in Mauritius you can open a multi-currency account. So instead of investing your 1 million directly into a continent, you can just save the money in Mauritius, reinvest it, and you mitigate the volatility of the currency.
Now, we're talking a lot about, let's say, mitigation of risk, and the fact that Mauritius does position itself as a safe place. And we often say on this channel, a lot of the investors that we speak to will say low risk, low returns. Going back to the earlier topic on rate of returns, and my question is to you, Gareth, because when we look at the continent, Mauritius does offer slightly more modest rate of returns for real estate, but also other types of investments. How do you view this?
I'm going to answer that by first going back to what was just said now. The ease of doing business is very important, okay? And at the moment, if you're buying any property or investing in any property in Mauritius, we use the whole spectrum here. So we need to have good banking, because you need to have money that can come in and looked after properly. And it's safe and secure. You need to have good legal framework, because once you buy something, it must go through the legal processes so that it is a secure document and you own something. And no one can look at it any other way. Mauritius has got all that. So then when we're looking at the returns, if we're getting a more modest 5% return as opposed to possibly 8 or 9% elsewhere, but it is safe and secure, a lot of investors now are not looking at the 9% that comes with the element of risk. They're wanting the 4 or 5 or 6% that has very little risk, because that is something that they can then sleep well at night. So I think it depends on what your appetite is, but by and large, most of the people who come through our company who want to come and buy into Mauritius, they're not interested in making a 9% return. They would have gone elsewhere. They're actually happy to take a slightly more modest return that has a good capital growth on your investment, but also gives you a good rental yield. And if that's the passive income they want, they sleep well at night. And I think that's what they're aiming for.
So talking about the slow money that we were talking about earlier, what are some of the subsectors? What are you seeing in terms of residential versus commercial versus industrial?
So in Mauritius at the moment, I would say most of our stuff is residential. Okay. Secondly is going to be commercial. So we've got a lot of, at the moment, talk about extra commercial space needed, and you can see that. You drive along the coastal roads and virtually every second plot of land that was vacant is now being cleaned. So things are going up left, right and centre in all the major hubs where there is already infrastructure. So we're talking Grand Bay in the north, we're talking Tamarin, Black River, Flick and Flack in the west, and internally, we've got major developments taking place in all of our smart cities where you've got a lot of, let's call it the Mauritians, who want to be closer to work as well, now buying beautiful apartments at a more affordable price, but one level up from where they were living or were staying. So they no longer have to all stay in one family unit together. They've now got there onto the property ladder, so to speak, by buying something, which is a wonderful feeling for them, because they can almost, walk out and say, look, this is now mine. And then they're creating their own legacy from there. It's important for everyone in Mauritius to have that feeling that you've achieved something and you've got something, no matter where you come from.
Yeah, absolutely. And I think this goes across the board, across the continent. Parik, is this something that you're noticing as well?
Yeah, so I wanted to just add on to what Gareth mentioned. There's two aspects to it. So firstly, there's the investment in Mauritius, property, right, or financial investments into Mauritius. The second one is using Mauritius as a hub for investments onto the rest of the continent, right, which we're seeing a lot of as well. So a lot of people, what they're doing is they're actually working out of Mauritius. So their families are based in Mauritius, right, but they're doing business on the rest of the continent, whether it's South Africa, Southern Africa, East Africa or West Africa. And the interesting thing is that we are bilingual, right? So even covering Francophone West Africa, West and Central Africa is quite interesting out of Mauritius. So we're seeing a lot of demand now of people who are actually coming and setting up, putting their family up in Mauritius, investing into property or renting out property to start off, so that once they get comfortable, then they go and buy the property, right? We were talking about that as well. And the schooling, the infrastructure, the road infrastructure, the connectivity as well to the rest of the continent is improving all the time. And I think the government as well is playing an important role in that, and is extremely important that they play an important role in that, because that connectivity makes it then interesting for the people to actually conduct their business out of a place like Mauritius. So you can live in Mauritius and work from Mauritius, covering the rest of the continent. I think that is the message that more and more is being passed, and we're seeing the fruits of that as well.
Yeah, and that's an interesting point, very much speaking to Mauritius as a strategic hub into the rest of the continent. I'm quite curious, Bilal, in terms of this direction, what are some of the trends? Who is most interested and incentivized by this?
The trend of investment into the hub?
Yeah, into the rest of Africa.
What we've been seeing is, from a developed market perspective, impact investing, looking for sustainable investments on the continent. What we've also seen is actually fantastic, is that many regional institutions and pensions are taking responsibility to actually invest locally in the infrastructure to assist their particular communities. So for example, we've seen particular pension funds that say listen, I want to invest in a telecom tower, but I would like it to be where my pensioners are going to see where that comes up, so that the impact is visible. But coming back to something that Garrett said, and you asked about in Mauritius the risk and the return. So as an investment manager, we look at it as risk-adjusted returns, right? So you've got to divide them, right? The question is now, what do you put as that risk premium on Mauritius, right? The hijacking statistic is pretty much zero, right? I mean, I've never heard of a hijacking. I heard there was one bank robbery. The first time I went to a bank in Mauritius, there was a Perspex glass like this, and the money was on that side of the table, and I was just thinking I could just lean over and take that. so that made me realize how safe Mauritius is. And I think for people that look at risk-adjusted returns, how low that risk actually is when you divide the return by the risk has a multiplier effect on what you actually benefit from. But that said, Mauritius is a tiny economy, and when we said we look at the continent, we're not all the same, right? So some of us are bigger, some of us are smaller, some of us are blessed with lots of metals and minerals to for the renewable energy space. In Mauritius, we were a monocrop country that focused on sugarcane. We've developed into textile, hospitality, financial services, and an IFC, which really the benefit of being invested in Mauritius is that it is a platform and a hub from which to do business globally. But at the same time, people do business. So people need to be happy with where they actually live in order to be successful and build those businesses and add the value that they wish to.
And Priscilla, your thoughts on these?
Yes, I mean, we've been talking of investors using Mauritius, foreign investors using Mauritius to go on the continent. Let us face the honest truth. We are a small island. We've positioned ourselves in a manner where we wanted to be the partner, a growth partner for the continent. And the government has an Africa strategy, has had for a long time. So we've done everything to make ourselves attractive so that investors could use Mauritius to go to the continent. So it's a win-win situation. We have to be humble today. We are saying all the good things about Mauritius, which are true, but Africa is such a vast continent. The resources, the opportunities, it is the continent of the future. Yeah. And what I see in my daily work, I see a lot of large Mauritian companies looking at the continent. Before, it was unheard of. Now the only way for them to expand is to go towards the continent. In various countries, they have their preferred countries, but it's happening more and more. And I think, a decade ago, this was unheard of. I also confirm what Parik was saying about India. The interest of Indians on the continent is amazing. Not too long ago, we assisted a very large conglomerate in setting up a structure in Mauritius. So it's a company, and then it's a VCC, which is a specific structure where each sub-company has a separate legal personality, and where through this structure they have set up companies in various African states. Wow. So I won't elaborate on this, maybe Natalie can say a bit more, but we have extremely interesting structures in Mauritius. And this is one of the reasons why, instead of going elsewhere, they would come to Mauritius to structure into the business in the continent.
Yeah, and this really speaks to cross-border investments, as you explained it here. Natalie, would you like to give us a more perspective into how that looks like for Mauritius?
Yes, Tanya. So, as Priscilla mentioned, I would like first to highlight what you've said about big conglomerate based in Mauritius. It's indeed true that they are also investing in the continent. Ourselves, because I'm part of one of the big conglomerate, we're investing massively in the healthcare, and in Uganda, we're investing in the textile industry in Madagascar. So yes, we have to diversify in the continent if we want to expand, because Mauritius is only 1.3 million people. You can't scale up. Let's be clear, we can't scale up in Mauritius. For cross-border investments, it's indeed we have different type of structure. And why is it so interesting in Mauritius? I believe if we compare to other jurisdictions, you can use the same structure, the same company, to hold your assets, or to do trade, or also to do consultancy. So you can use the same company, whereas, like, let's say in other jurisdictions, like Dubai, you can't do that. You will have to have 3 different types of structure, and it's really costly.
I can only imagine when you look at some of the commentary coming from corporates and small businesses alike in terms of being able to maintain and upkeep a company from a governance perspective, and particularly going into other markets. Bilal.
Just to add to what Natalie and Priscilla are saying about using Mauritius as a headquarter for an African conglomerate, the benefits of that are that there is no exchange control in Mauritius, and we have multi-currency accounts, as my colleagues have mentioned. So it's much easier, besides doing cross-border investment, just running a payroll, as I'm sure Natalie does for many of our clients. When running a payroll across multi-geography, it's so much easier to do that from a Mauritian bank, which has got all the currencies available and the ability to pay to all these without additional red tape, and of course availability of the currency.
Gareth, what do you see as the main advantages to operating out of Mauritius for cross-border investments?
One of the nicest stats we've got at the moment is about 19 or 20% of all of our buyers currently are Mauritian. Now, 10 years ago, I think we were sitting at 2 and 3%. Okay, so when we're talking about all these big conglomerates doing better, looking for expansion, everyone inside there is benefiting. There's more money involved, there's more money available, and it's staying local. So when I sit and talk to younger people now who come through, buying their first apartment, buying their first house, afraid of the amount it's going to cost them, but the excitement that comes with it, it's wonderful to see that happening on a bigger scale now, because it means Mauritius as a whole is doing better from the ground up. So it's not just that we want to have us as an investment platform and please bring your money from Europe, please bring your money from somewhere else. It's wonderful to see the money staying there as well, because these youngsters can all afford now to go and say, look, I'm now going to move and I'll go and buy something somewhere else. But they're not. They're spending that money locally. So when you're talking about cross-border trades and what have you, I love the idea that we can go and trade elsewhere and that people can go elsewhere and spend it. I love to see them spending their money locally, because it creates an excitement for me that, you know, even with a population not expanding more than it can, because it's only 1.3 million, our population is getting wealthier, right? And the younger people are now getting more money, more disposable income, and spending it locally. And that to me is a big pat on the back for Mauritius.
Absolutely, very promising indeed. Parik, how does MCB, from a commercial corporate banking perspective, employ various strategies to further facilitate cross-border investments?
Yeah, so like I mentioned earlier, we are obviously based out of Mauritius, but we also have banks in Madagascar, in Seychelles, we are present in Maldives, we are also present through joint ventures in Mayotte, okay. But we've also opened rep offices. We've got one in Joburg, we've got one in Nairobi, we opened one recently in Lagos, and we have one in Dubai. Because there's a lot of, so we are an African bank, right, which has a very clear strategy on the continent. So all these hubs help us in terms of all the investments and all the business that is happening on the continent from these hubs. We want to be part of that, and that's the reason why we have that. So at the same time, we are in these parts of the world because we want to understand what's happening on the ground so that we can use the expertise that we've gained over time doing business in the region to actually go and do more business in these various parts of Africa. Now, as I mentioned earlier, we created an expertise on the energy and commodity side, which is something that we started many years ago, and today we have a very, I must say we are a significant player in that field. We are looking at other segments as well. One of them is metals and minerals, because that we feel and we see that it's the future of the commodities business on the continent, with you know, some of the largest reserves that we have in the world sitting in Africa. A few years back, we've also developed and we continue to develop our global and international corporates business. So basically, as I mentioned earlier, we're agnostic to whether you're structured out of Mauritius or anywhere else in the world. If you're doing business in Africa, then we want to be talking to you. And we're not only looking at the financing part of it, we also now working a lot on the transactional piece. So basically what we're trying to do is offer businesses a one-stop shop. So whether you need financing, and mainly in foreign currency, because we've got a large foreign currency balance sheet, we are very active on that front. But besides that, we also help our clients in terms of their payrolls, for example, into different parts of the continent. So settlement in local currency. So all the transactional banking around that. We put a lot of effort and a lot of money into the technology part to ensure that you can manage your treasury management out of one bank, right? And the other thing that we're looking to do as well is we're helping them in terms of their requirements in local currencies in Africa. So one other thing that we're doing, while we are able to fund on foreign currency, we are creating a network in different parts of the continent where we work with local banks to also offer our clients whatever requirements, funding requirements they have in terms of the local currency as well. So that helps them to have a one-stop shop approach for our clients on the continent.
Quite a lot of incentives here that have been put forward. I'm quite curious. I always like practical examples. So Bilal, I mean, Stewards Investment Capital, what do you see as the main benefit of operating out of Mauritius?
The proximity to the continent and the accessibility to the developed markets. And as Mauritius has investment grade rating, the IPPAs, it allows, it makes our job easier to access that capital that we bring onto the continent. And being part of SADC, it also allows us to easily receive investment from the continent. I spend a lot of my time traveling between our offices in South Africa, Mauritius, or the US, and then we work with partners in Ghana, Kenya, Zimbabwe, who are on the ground and look after clients on a more day-to-day basis. So we haven't expanded our geographic footprint as a corporate, but we've expanded through partnership. And what we see highly beneficial to investors from the continent is that they are looking for that diversification and that risk management. And from Mauritius, we're able to then give them dollar investments, which give them returns that hedge their local currency risk at interest rates or equity return rates, IRRs, which are attractive within their portfolios and help them to manage their fiduciary risk. And then from the developed market side, when that money comes back onto the continent, we're able to deploy that money into our infrastructure projects, which we support. We're very passionate about telecom towers. As I mentioned earlier, that's something that we think is a fantastic way to empower our youth and our general, not just the youth, everyone uses a phone now. And I mean, the common thread we see across the continent, we are all different. As I've said, the cultures, the languages, the sizes of the commodities we're blessed with, they're all different. But the common thread is the appetite for innovation and the appetite for poverty alleviation and the appetite to advance. And really, if we can give our people the tools to enable them to have that upliftment, that'll be a win for us. That's
okay, brilliant. Now, Natalie, I want to ask you the same question. In terms of the clients that you engage with, what have you seen to be the biggest advantages and benefits that have attracted them to Mauritius?
Well, I believe that when you're a project owner and you would like to raise funds, basically Mauritius will offer all this regulation and governance framework, and MIDCO, we will help that project owner to do the incorporation of the company and guide them through all the complex, I will say, administration work, and help them to prepare also all the data room and all the documents that is necessary for to pull all those investors. And when you're investors, when you're a DFI or you're a fund of fund, you would like to invest in a project where it is safe, where regulation is well, I would say,
established.
Exactly, well established. And also in terms of probably arbitration in case of any court case or whatever, you also have this arbitration system in Mauritius. So this is for the project owners, but also for fund manager. We can see quite a lot of funds coming to Mauritius to set up in Mauritius because they are able to open multi-currency account as well. And also, as I mentioned before, it's not only about banking transactions, but it's also about exit. When you're private equity funds, basically you invest in a project for 5 or 7 years and then you would like to exit. So all those frameworks that all of us mentioned, I think is really giving a safe place for the investors.
Gareth, looking to the future of Mauritius and the clients and the investors that you deal with, where do you see the biggest opportunities?
I think the biggest opportunities are that Mauritius, in the property market we're in, is that Mauritius is such an easy place to live in. You know, so if you really break it down, we're talking about investing and where to go. But if you've got a place where you feel at home and you can just fit right in, Mauritius is that place. So we have such an eclectic blend of, I would say, Africa, Asia and Europe. So whether we're talking the people, whether we're talking food, the cultures all just are intermingled. So honestly, no matter where you come from, you just feel like you fit in. It's a very easy place to actually have as your base. It's a difficult thing to explain until you've actually gone and done it, and then you just feel like it. You know, there's a wow factor that goes with it, but that makes business easier to go and do from there. A lot of the people, you know, when you're talking the future, a lot of people who come through our doors who want to buy, they buy one, they're there for a little while, they live elsewhere, they come and visit, and they do it again. And they do it again because there's a comfort zone there. There's a home away from home feel that they get. So the government is definitely doing a lot right at the moment. And for a little country, I will definitely blow their horn. I think they shoot far above their weight.
Fantastic. Now, in wrapping up, Priscilla, I want to come to you. Just looking to the future of Mauritius, what are you most excited about?
Very excited about our future. I think we are well positioned. We've laid down all our cards. We've got it right so far. As I said, 30 years is a long time. But also what is exciting is that there is a conversation going on at the moment. What more can we do? How can we accompany the continent for its, greater prosperity, more development? The ongoing conversation is what gets me more excited. So, and one word as well, the Africa Continental Free Trade Agreement, in my view, this would change the landscape of Africa. So very excited about this, very excited about the inflows and more outflows on the continent. We are in more than 80 locations, Dentons, and in 17 African countries. So I am sitting in a position where I can tell you, I see a lot of interest, and it's very exciting.
Fantastic. Parik, how do you see the future?
So I'll jump on what Priscilla actually mentioned earlier, where she said that there are approximately 450 private equity funds that are structured out of Mauritius, investing around $82 billion on the African continent. We are an African country, right? Our role in terms of the financial sector in Mauritius is commitment to the continent, right? We want to be this partner to help grow the continent further. And those $82 billion, why I wanted to jump on that is, according to a report that we read recently, that represents approximately $6 billion of tax revenue per annum for African states. So as I mentioned, I think for us, the exciting part is that we're committed to the continent, right, as an ecosystem. We are here to make sure that the continent benefits from that as well, right? While obviously Mauritius will benefit, but Mauritius is part of the continent and the continent will benefit as well. So that's the interesting part. Opportunities are huge across the board. I think we need to take it step by step and really focus on the quick wins and make things happen more quickly.
A lot happening here. Natalie, I'm going to close off with you. Just your thoughts on the future of Mauritius.
So I believe that digital transformation is key. Mauritius is far, we are an island, and if we want to continue to support Africa, I think all of us will need to be digital to create companies within maybe one day, to create a bank account within one day. So, yes, so I think digital transformation is key, and also, of course, regulation and compliance is key as well.
Fantastic. Well, I'd like to give a big thank you to all of you for this really insightful conversation looking into Mauritius's IFC accelerating Africa's economic expansion. I've certainly learnt a lot, and I believe that our audience has as well. This was a CNBC Africa special, and I was joined by Parik Talsidas, Head of Financial Markets at MCB, Priscilla Balgoben Boy-Royal, Senior Partner and Barrister at Law at Denton's Mauritius LLP, Bilal Adam, Chief Executive Officer at Stewards Investment Capital, Gareth Land, Property Consultant at Two Futures, and Natalie Dennis, Chief Executive Officer at Mitco. From myself, Tanya Habimana, it's goodbye for now. Until next time.